2013 proved to be the year that the Northern Ireland economy began its recovery. In many ways it was a game of two halves, with the first half of the year local firms reporting falling levels of employment, orders and business activity. However, the summer heralded the beginning of a broad-based recovery across all sectors, where the second half of the year saw strong growth. Other indicators highlighting a recovery in the Northern Ireland economy include new car sales. New car sales is a good indicator of consumer confidence and consumer spending. And what we saw in 2013 was new car sales increased by over 10% last year. Looking at the labour market as well, the official employment figures in terms of employee jobs, we saw quarterly growth for 3 consecutive quarters last year. We also saw the claimant count, or the dole queue, continue on a steady descent. And even in terms of the housing market as well, 2013 will mark the year that house prices in Northern Ireland finally stopped falling. If we actually look at then our Northern Ireland's two most important trading partners, the wider UK economy and the Republic of Ireland, both these economies are expected to see economic growth accelerate in terms of the UK to about 2.7% this year, and for the likes of the Republic of Ireland, economic growth to accelerate to about 2%. Looking at the Northern Ireland economy, we estimate that the local economy would have expanded by at least 1% last year, and this should accelerate to at least 1.5% in the year ahead. Northern Ireland's overall labour market position is set to improve in the year ahead as well. We expect to see the unemployment rate, which is currently at 7.5%. We don't anticipate this to be any higher at the end of the year. We expect further employment growth, and the one aspect of the labour market which is going to remain a cause for concern is in terms of youth unemployment, where youth unemployment, which has been close to 25% at stages over the last 12 months, is likely to remain high, not just this year but for the years ahead. Looking at terms of the housing market as well, this is the first year since 2007 that I'm forecasting house price growth, and I expect the average house price in Northern Ireland to increase by 5% over the next 12 months. However, this conceals differences in terms of location and property type. One aspect of the economy which has exceeded expectations throughout the downturn has been the levels of inward investment. Indeed, we anticipate further Invest Northern Ireland investment announcements in the year ahead. While 2014 is set to be a year of overall improvement as far as the economy is concerned, the economy is not without significant challenges. One of these is inflationary pressures. This is an issue which is hitting hard businesses and consumers alike. We're beginning to see wage costs filter through in terms of inflationary pressures, and in many ways this can be viewed as a sign of an actual economic recovery. And indeed, for many employees, they will be expecting or indeed hoping that 2014 will be the year of their first pay rise. While many people will be getting a pay rise of perhaps 1 to 2%, inflation, which has eased in recent months, is still expected to rise in around 2.4 to 2.5% for the year ahead. Looking outside of the headline inflation rate, looking at food and energy as well, it is set to increase at 4 to 5%. So while people are getting pay rises, it's going to be insufficient to compensate them for the wider inflationary pressures. So they're still going to feel the squeeze on the incomes in the year ahead. So despite the fact that people are talking about an economic recovery, for many people they're not going to feel it in their pockets or in their wallets or purses.